Housing prices are actually cheap in the US compared to the world. That's our topic today. So my name is Dan Free. I talk about real estate on a daily basis to educate you guys. Everything real estate, from mortgages, how much money you need as a down payment, what credit scores do you need, how much money does it take to buy your first house. But in today's video, what we're going to talk about is housing in the US is still quite affordable when it compared to other countries. So today I'm unveiling I guess I'll say the secret sauce on why I know the housing market isn't going to crash, while all these other people are out there saying housing market's going to crash. As you can see here, housing predictions. When will the prices be affordable again? Is there a crash? When's the crash? And the list goes on and on and on. So today we're going to talk about, before you turn the dial, I'm going to explain why. We're going to talk about the Canadian housing market and how that is a true bubble and how we're going to compare that to United States. And then I'm going to show you why the housing market isn't going to crash. So without further ado, let's get over to it. Is that Canadian housing market in a bubble? So the Canadian housing market is a bubble. I'm admitting it's a bubble, and the housing market is going to have to come back way back down in Canada for it to kind of go forward from here. But what I want to talk about today is in details why this is the epitome of what a bubble looks like. And then we're going to compare it with other countries in the United States to see where the US fits in all this. And then again, I'm going to show you my secret sauce at the end on why there isn't going to be a housing crash. You'll probably be able to put the pieces of the puzzle together as we move forward. So is the Canadian market in a bubble? Well, you decide after I give you the data. The housing market is strong in many parts of the world. However, Canada's housing market is most likely a bubble. Canadian home prices have decoupled from its fundamentals. What's its fundamentals? Well, if you scroll back just a couple years ago, they actually provided that information here. The fundamentals to buy real estate in Canada, a little bit different than here in the US, but here's their fundamentals. Spend no more than 5 times your household income on a house. Okay, that's in there. Spend no more than 30% of your gross income. That's pretty much in line where the US is. Put down at least 20% or more and have at least 5% cash in semi-liquid buffer. Well, you don't need 20% in the US. You in most cases need 3%, not the 20% down. But I'm on the bandwagon here, having cash reserves and everything else. Perfect for there. Own your property for at least 10 years or longer. Well, that's a good point. And I always say you should be there at least 3-4, minimally 5 would be the ultimate. But if you're not going to be in a house for at least 4 or 5 years, don't buy, folks, because it's not an easy process to buy a house, do what you need to do, then sell it in the matter of 2-3 years, trying to look and make a profit, because you're going to have to pay realtor fees, moving fees, all these other costs. And it's not prudent. It's not a good financial decision to do that. So let's get into the nuts and bolts of all this thing. If you scroll down to this, how big is the Canadian housing market? Well, we go through this. It is when the housing prices decoupled from disposable income growth where the bubble started forming. Below, here's a chart of the US versus Canada. So you hear me talk a lot about disposable income. You might get sick and tired of it, but it's a big piece of the housing market, especially when you're looking to buy a house. If you look over here, you can see the housing market in the United States. Disposable income is higher than home prices. It's getting up there, and the spread's getting a little bit lower, but you can see, on the flip side, if you look over to Canada, look at that. Disposable income is running right around 200, where home affordability or home prices are 350. 150 higher than the disposable income. How do you buy a house? Unless you're an anomaly out there and make a ton of money or a ton more money than the average person, you can't buy a house. Then you keep going through here. The U.S. housing market is actually considered cheap when it comes to Canada. Okay, and we're going to keep going through more and more of this. Best ways to invest in real estate. This gives you how you can invest in REITs and stocks and stuff like that. But how expensive is the Canadian housing market? So the one thing I want to look at 2 gauges here, but I'm going to show you the chart. Canadian housing market has a price to income ratio of 7.24, gross rental yield of 4.87, price to rent ratio of 20.53, and a mortgage as a percentage of income of 49.63. From these unbiased metrics, it is clear that the Canadian housing market is in a bubble. So let's go over here. Here's the top 24 areas that they studied. Okay, you have Saudi Arabia at the top, and New Zealand at the bottom, and Canada right, not in the middle, but they're up there about 17. So you grow across here in the Canadian housing market. The first thing we have is price to income ratio. They're at 7.24. Okay, the worst on this, basically down through here, is 8. I want to say 8-ish. Okay, where are we? We're at 4. Okay, so we're well below that. Well, let's scroll over. Mortgage as a percentage of income. Well, Canada's at 49.62. About 50% of their income is going to their housing. What is it in the United States? 29.42. You go over to home affordability. The U.S. is at 3.4, and Canada's at 2. Okay, so you can see the United States is number 2 on this list of 24. Okay, so now you're starting to see, okay, there's more to this picture than meets the eye. So then let's get over to foreign investors. Here's my secret sauce. A lot of people discount the foreign investors. They're like, okay, in the United States, the job market's doing this, inflation's up, interest rates are up, home prices are up, but you still have people from all over the world, such as Ukraine and Russia. There's basically a world war going on there. People are trying to flee there. Well, a lot of people are also trying to put their money somewhere so they don't lose it. Where? Well, the most prudent spot to put it is in the United States. Why? We have probably the best government system throughout the whole world. Not saying it's the greatest, and it's the least corrupt kind of sort of as well. So they look at that. They look at our financial systems. They look at our banking systems. They look at our stock market. And they're like, okay, they're a prudent country to invest in. They have security on their government side. They're a powerhouse when it comes to war. So it's a prudent decision there. So let's get and dive into how much foreign investors are actually buying in the United States. So you see here, although COVID has been bad for many of us in so many ways, the pandemic did one good thing. What was it? The pandemic helped protect American home buyers from the resurgence in foreign real estate investors. In a big way, the pandemic has throttled the demand from foreign real estate investors to buy American homes. Okay, so what it's saying is it's kind of a sounding board of what I was just saying. There's people all over the world seeing value in the United States. With the Ukraine-Russia war, the demand for foreigners to buy American real estate has now increased even further. International capital from Eastern Europe is now looking for a safe haven. That safe haven probably is going to be the United States. Back in 2017, there was $153 billion worth of foreign investors coming to the United States. Well, it's down quite a bit from there, but the demand, let's just go down through here. This article posted up. The demand's still there. The top 5 foreign buyers of the U.S. in real estate include Canada, China, Mexico, India, and the United Kingdom. Together, these 5 countries account for 29% of the $54 billion in volume that the foreigners are buying in the United States. So it used to be in 2017, post-pandemic, there was about $150 billion worth of real estate being purchased. Since COVID and the lack of and a bunch of other things, we're at 54. So you can see there's a pent-up demand for that. So we go down through here and we're going to find where that is right down in here. Therefore, to conclude it, we can estimate there is about $230 billion in pent-up foreign demand for existing home buyers. Okay, so we have that coupled with, if you're watching this video and put off home buying for the last 1, 2, 3 years because you heard of the crash, well, now you have FOMO building on the sidelines. People are like, okay, they're getting used to 6 and 7% interest rates. I'm letting you know that. And the economy's starting to get a little bit more stabilized. So now what's going to happen is people are saying, okay, I'm going to wait for real estate prices to crash, come down, or mortgage rates to come down. Pent up demand. So there's pent up demand domestically from those people. And then you have over 230 billion in pent up foreign demand out there. And then you got to remember, folks, you still have existing home sales not hitting the market in the US. So basically we have just new construction sales out there. People are gobbling those up. So there's a lack of supply, which we know, And I'm just proving to you there's demand domestically and internationally. That's going to keep us from a housing crash. So that's my report for today. I'd love to hear some of your comments down below. Feel free to post anything you want down there. And believe it or not, I comment on almost every one of those comments below. So I'd love to hear your comments down below. And most of all I ask you to do is give us a thumbs up and subscribe down below so we can help get more this information out to more and more and more YouTubers to help them understand real estate 2023. Thanks so much for watching, guys. God bless. Have a fantastic day, and I'll see you next time. Bye-bye.